Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. On Friday, the Australian dollar gained bullish traction and this time cleared the one resistance that was key to the bearish sentiment. Now, with a break of 71.25 has left me slightly in a neutral position for an intraday. On Friday, the market posted a high of 71.47. It was triggered mainly from the US and China trade war talks, which was somewhat positive from the news coverage. Despite a holiday shortened week in the US in observance of Washington's Day or President's Day, Chinese President Xi said trade talks between the US and China would resume this week in Washington. This comes after the US trade delegation led by Treasury Stephen Mnuchin and also Robert Lighthizer in Beijing last week. The outlook for the Aussie now, as I mentioned, is neutral and present still questions what will come out of these talks after President Trump did say that they were very complicated and he may extend the March 1 deadline and not impose tariffs of 25%, which currently holds at 10%. This week we have on Tuesday the monetary policy meeting minutes, and then on Friday we have Governor Phil Lowe to speak and testify, should I say, in front of Parliament. As I say, the neutral outlook, well, let's see how the market plays today. Although the RSI is bullish, the MACD is not marrying up with the outlook. So I'm a little bit skeptical on the advance. But I really would prefer to wait for better levels to initiate whether a bull or a buy, that is, or a bear or a sell. So let's see how the market plays out today. Two interesting patterns came through on the euro. First of all, starting with the euro, we can see that it posted a bullish dragonfly doji. Dragonfly doji is a rare candlestick pattern that occurs at the bottom of a downtrend, and as you can see, this was a downtrend. It is considered to be more reliable than a bullish hammer and tends to be stronger in a bullish signal. The pattern is considered more reliable after establishing a bear trend, which we have. But on the flip side, though, the US dollar index posted a bearish outside range day after it plummeted from a high of 97.19 on the index to a low of 96.64 and ended up in New York, as I mentioned, around 96.69 and an outside range day. The negative candlestick now awaits confirmation. A break of 96.40 would give this confirmation and therefore see further momentum in euro and look towards a target of 113.5570, which was nearly contested last week. From a technical point, the outlook and also the dragonfly does support a slightly better move to the upside. Well, the dollar yen is weakening and as you can see, moving further away from the resistance of 111.60. On Friday, it did break beneath 110.45 to a fresh low of 24. Now, this has negated the bullish outlook and also proposes a further downside case. Keep an eye on this RSI because if we get a move through the midway point, I am looking at a target of 109.7075 and reassess from there. Resistance on the day, 110.65. I mentioned bullish divergence on the pound, what it came through, and now breaking above nearly this downtrend line, which started off as a descending triangle. It is assessed a break above 129.1525 would give further coverage up towards 129.95 and reassess from there. On the support side, it's seen at 128.65. Looking at gold, it surged on Friday and now looks back towards the target of 1,324.26 after posting a high of 22. It is assessed a break above 26 would give further clarity of a rally of 1,350 as a new target. But let's not get too bullish at the top side of the range. I would like to see a little bit more confirmation, and we are getting that, as you can see when we look at the indicators here on gold. Any pullback would see support around 18 and firmer at 12. And rounding up with oil is the fact that oil rallied on Friday quite significantly and managed to break above the 56 handle and now gives further clarity towards $58 a barrel as a target. The indicators are a little bit on the weak side though, so do keep your trading stop tight to your risk management in case we do get a flip or turnaround. Support on the day seen at 54.95 to 55.25. I believe as long as that holds, then we're safe to say that the market should continue its trek to its target of $58. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the report, and I hope you enjoy the great start to this new week.